Hey everyone, how's it going? It's John here. Do videos on investing. You'll see some videos on credit, as well as some videos on adventure travel, and uh, quite a few videos on active living. But also, here we are. It's July today. It is Thursday, July 15th, and pretty much in the thick of some busy season for the furnished rentals out here in Southern California. I've got three that I do it for, starting to build some content in that area because we're right in the thick of busy season. But what do we have today? We've got an investing video. I'm going to talk a little bit about Netflix because here we are, July 15th, and Netflix, what happens is usually they kick off the earning, well, I shouldn't say usually, it's like always, right? For kind of the growth tech, the big tech. You can't, I don't know if you can really classify Netflix is big tech yet. I imagine a lot of people will. I mean, certainly, large cap starts at 10 billion. Netflix is now at over 200 billion in market cap, so they're certainly, big, of course, right? But they're not as big as the big ones, like Facebook and Amazon and Microsoft and all that. But Netflix is very interesting because, here 2021, it's been a very interesting year for the growth stocks and for the stocks. They've been on a tear really since June. Actually, they had a great April and a very flat May, but just got ripped apart from the middle of February all the way until the end of March. But nonetheless, for the most part, it's been a pretty good year, or very good year this year for stocks. And what happens is summer is usually pretty hot, and when it starts up is when the earnings season starts, right? So in the years past, when the markets have been good, I've noticed that kind of as the earnings season kicks off, middle of July all the way through the end of August, things are usually pretty hot, and then September kind of is when it sees its issues. But basically, Netflix is going to kick off their earnings on July 20th, which is next Tuesday, after the market closes. And wanted to kind of bring you into like a little bit of Netflix. I mean, at this point, they're over 200 billion, so it's kind of hard to imagine that they're going to 10x at this point. Certainly very fascinating. I mean, Netflix is at this point my highest return investment ever, pretty much. Well, at least in with respect to the public markets, because I started buying their shares in 2011, and then probably my lowest position was in 2012. And I've got about, when you look at the 52-week high of Netflix, I've got an 80x return on that. So if they start to set all-time highs in 2021 here, I'm going to be on my way to a 100x return, with Netflix here. But it's hard to know where they're going to go, because I think that it makes a whole lot more sense than not to hang on to Netflix for the long term as they start to get into pretty much every country in the world, which they might be at this point. I'm not really sure, but it's certainly a safe bet, and certainly still a growth play. It's not really in the repertoire of what I look for now, because what I look for now is more smaller, because I actually started acquiring Netflix when they had a $3 billion market cap, and at that time their revenues were $3 billion as well. But let's take a look at Yahoo Finance. I want to kind of show you real quick. Before we do that, I want to tell you about what I have here. So I kind of have a 6-point scoring system, when I look at a growth tech opportunity. And what those 6 points are: first one, and every investment I take a position in, basically it's going to have it. It's product. You got to know the product. I will absolutely, not invest in something or take a position if I don't really understand the product and understand how they make money. The number 2 is market cap. So if you can get in early, obviously that's better. Like, for example, Netflix, and I started, purchasing Netflix when they had a $3 billion market cap. Now it's over 200, right? Ideally, if you can spot it and get in at that mid cap level, which is in between 2 and 10, that's great. If you can find some under 2, that's great too, but like that's kind of hard. You got to be really good if you're going to find opportunities at under 2 billion to actually start, right? The next is gross profits. I really like a gross profits. I think that the number here, there's a kind of a key number I've come up with, and that's 35. So what's so great about 35 is, well, number one, if you're achieving a 35% annual return, number one, you're beating all the venture capitalists, right? Number two, if you are consistently achieving a 35% return on your portfolio, you're going to be doubling your portfolio every 3 years, right? So 35, every 3 years you'll be doubling it or more, right? So, and that doesn't account for withdrawals, of course. And then you go and spin that into a company, right? So if the company has year-over-year revenue growth of 35% or higher, same thing goes with them. They're going to be doubling their revenues every 3 years as long as their year-over-year revenue growth rate is 35% or higher. Netflix is kind of big now, so they're not quite at that 35%. But nonetheless, they are at a gross profit level of above 35%. And they've always, even since when I started investing in them, they have always had that gross profit just a little bit over that 35% mark. The next is value, taking a look at the annual gross profits and then dividing it into the market cap to actually come up with a relative value relative to other companies that are similar or other growth tech choices that you're interested in. And really is the last is 1 billion. So, ideally when I'm looking for the next Netflix, the next high returner, I want to try to, start that position when that company has recently or is about to hit 1 billion in annual sales. Here we are, end of 2020. I mean, Netflix did 25, and they're supposedly on their way to 30 billion for 2021. We'll have to see. But let's take a look real quick at their financials, and we'll go from there. All right, so we got market cap 240, getting bigger they are. So if you take a look at it, everybody, so you got fiscal year end 2019 to 2020. They've got, and I have that in the spreadsheet here, 24% year-over-year revenue growth. So what's going to happen is the companies get bigger, certainly like Netflix, that year-over-year revenue growth is going to, most likely go down. I mean, if you take a look as the numbers get bigger, not many companies have even what Netflix has. Like when you get to the top of these, and I sort this according to revenue, right? So you got Amazon, Apple, and all them at the top. But Amazon does have high year-over-year revenue growth, but that's also has quite a bit to do with the pandemic. So we'll have to see what happens with them, when 2021 is over with. But nonetheless, most companies that are bigger than Netflix don't even have their 24%, right? So anyway, so there you go. So that's 24%, and so it's pretty consistent, as you can see. Basically 2018, 15 and change, 2019, 20 and change. 2020, 20, about 25, billion, and then it looks like 2017 is right there, a little bit above, 11. So they're pretty much adding about 5 billion, at the, fiscal year ends, for them. If you take a look at their gross profits, it's always been pretty consistent. Right there you see, and again, this is most recent. Fiscal year end of 2020, 38.89, and that's above 35, so that's great. And they've always pretty much been at that range, that 35 to 40% range, all the years that I've watched them. So that's actually, quite strong. You're going to have some, certainly like Facebook's unbelievable gross profits of 80%, and there's a lot of others that have really attractive gross profits, but that's what you have on Netflix there. So if you take a look at Netflix, I got a TipRanks account here because I started a basket of 50 stocks and then also came up with 10 hot stocks out of those 50 that are strong buys to 10x in the next 1 to 10 years. I'll put some links in the video so you can go and see more about that. But basically, I'm sorting this according to the top gainers since early June, right? Asana's at the top there. Asana's like basically it's like a project management, cloud-based project management company, which I really like. Anyway, so we got Netflix pretty much in the middle of the pack, but still pretty good. So they're up about 9.7, so about 10% since early June, which is a lot, I think, for a big tech, but there you go. So I wanted to do this quick video for y'all because I usually do the Netflix earnings release. Most likely I will do that next Tuesday when they release their earnings after the bell because, again, I'm just a long-time Netflix investor. I really not necessarily adding to my position, just kind of holding what I have with Netflix and letting my winner go, just kind of letting that winner run, that's for sure. But I wanted to do this video because what happens is Netflix is usually the group that kind of kicks off the for all the growth tech out there, it kicks off the earnings. So pretty much everyone is after, all the big names are after Netflix. So that's next Tuesday, July 20th. So here we are today, Thursday, July 15th. A lot of companies were in the red. So in the event that and this is a hot year, right? In the event that the stocks are really hot from middle of July to end of August, might be a really good time to get in before next Tuesday, July 20th, okay? Everybody, hey, I hope you like that. Just so you know, all this is not financial advice. I'm not a financial advisor. I'm certainly not your financial advisor. It's all for entertainment and for education. I do have a background in investing. My first job out of college was Merrill Lynch. Then I did investment banking after that, and then worked for Sun America here, which is an investment firm in Los Angeles, for 3 years after that. I do have a good track record as an individual investor. I've got an 80x return on my Netflix shares purchased back in 2011, 2012, and then also a 33x return on Apple purchased in June of 2007 before the first iPhone came out, and now just recently logged 3 more 10x returns, which are Amazon, Microsoft, and Tesla. Tesla is kind of a lucky one because that happened so quick, but basically tons of others, singles and doubles, triples, home runs and grand slams, and I've got some links below that you can check out where I've got a credit blueprint, and I also have an investing blueprint where I go into detail on all that, and then you can also kind of get the basket of 50 stocks, and also if you want the top 10 strong buy turbo growth stocks that could 10x in the next 1 to 10 years. Okay, everybody, thank you very much and have a great week.